Making money in 2024 in Forex has never been so easy. And I'm going to tell you why. And I'm going to give you a step-to-step guide on how to make money in Forex. Just like my student who's turned $30, yes, $30 into $200. So it's possible that you can do the exact same thing once I teach you the step-to-step guide on what I show my students. Now, before we get started in looking at the markets, we need to understand what is the Forex market. So the Forex market is very, very simple, and most of you have already done it before. It basically means foreign exchange, okay? And this foreign exchange is where you buy and sell currencies. And as a trader, we need to understand when to buy and when to sell so we can make profit. For example, we're going on holiday, right? And I know a lot of you guys have done this before. We go on holiday. Let's say I go from London to America, right? I can't use my London pounds in America. Okay, so what do? I have to go through Forex, the foreign exchange markets, and I have to convert my pounds into American dollars. So for example, let's say I had £100. I need to convert it into USD. We go to the conversion rate and we see the rate, right? The rate will be, let's say, 1.14. That means that every £1 that we have, we exchange it for $1.14. So that means I have £100, I exchange it for 1.14. That means I've got $114. How do we profitalize in this? Well, the way we profitalize is we find the best rate. Okay, and that's how you trade in the market. You want to find the best rate. So you buy on the lowest point and you sell at its highest. Okay, so now that we're looking into the markets, you can actually see that this is something called TradingView, and this is a platform that we actually look into the market, and we also potentially buy and sell on this platform as well. Some traders use different apps, which I'm going to show you guys as well. But most of the time, a lot of traders you're going to see they're using this platform. So what we're going to do is we're going to have a look at this platform. I'm going to break it down to you guys fully so you guys understand. So it's very, very simple, guys. So if we just go on a random currency, let's just say Euro USD. Bear in mind, guys, Euro USD is the most traded pair in the whole world, right? First and foremost, you see a load of these things. These are called candlesticks. So each candlestick shows a story of a movement in the market, and we want to understand this. So the blue candlesticks means that the market's going up, and the red candlesticks means that the market's going down. Now, sometimes a lot of trades will have in different colors. Sometimes you have it all black and all these things, but most of the time, blue or green means, the market's going up, or red means the market's going down. Now, you can actually make money when the market is going up or down. You can buy and sell in the market. So on the left hand side, we have a few tools, which I'm going to show you in a second. But first and foremost, we've got different time frames. Usually you've got, the 1 hour, 2 hours, 3 hours, 4 hours, 1 day, 45, 10 minutes, 5 minutes, 1 minute, all these time frames, right? And what it is basically, if I change it to 4 hours, you see the market kind of changes. We're in the same market, but the market kind of changes. And that's because these candlesticks have changed from 1 hour candlesticks to 4 hour candlesticks. Now, you can actually look for currency pairs. Let's say, like, for example, I want to trade gold, right? USD, you can actually trade gold. Now, I know a lot of you guys, you also are, crypto traders, right? So you can actually look at crypto. So, for example, BTC, right? I can actually look at Bitcoin as well. It's exactly the same market. So you got Bitcoin, you got stocks, you got Forex, foreign exchange currencies, you've got all these different kind of pairs. You can actually have a look, and they're all pretty much the same thing. They all work with candlesticks. So it's very important to understand. And foreign exchange has around like 5 trillion traders actively trading every single second of the day. So foreign exchange is the most traded thing in the market at the moment, way beyond stocks, way beyond crypto, way beyond everything, right? So it's really important to understand foreign exchange. But we're going to go back to Euro USD. So you can see over here it says Euro/USD. So what this means is that the euro is against the United States dollar, right? If I had a different one, let's say GBP USD, again, this is the Great British Pound against the dollar. So when you see price over here, 1.26253, right, that means every £1 that I have, I'm getting $1.26 back. When the market is going down, you know that pound is going down. And when the market is going up, pound is going up, right? Remember, it's against. So now what we're going to do is I'm going to just show you a few different sessions that we've got going on. So what I like to do is to make things easier for a lot of traders, because I know that a lot of traders, they get confused on different sessions and everything. But Traders actually trade in sessions. They don't trade every single second of the day, guys. You know, me as a trader, I don't trade every single second of the day. That's just a false rumor that's gone on that, oh, every trader trades every second of the day and da da da. No, we actually trade in sessions. So what there is there's actually an indicator. So if you go on the top hand side, you can see left hand side, there's something called indicators. You click that and you click market sessions. Now, I like to use this one. It's the second one down by Leviathan. I honestly don't know how to say the name. You click that, and now you've got an indicator on your chart. But what it is, if I just go into a lower time frame, you get to actually see the market sessions. So, for example, London. For me, I'm in the London time zone. So for me, London session would be from 7 a.m. all the way to 4, right? Then over here, New York is from 1 all the way down to like 10, and then you got Asian session, which is from midnight basically all the way to like 9 in the morning for me, right? So everyone will have different time zones. If you're on different time zones, if you're in America, it'd be a bit different. If you're in Africa, it'd be a bit different. If you're on, Australia, it's a bit different, right? It's all different. But just understanding just the sessions, you get to understand your currency pair. So for example, if we go to Euro USD, the reason why I want to use Euro USD is because it's the most traded currency pair in the market. So for a beginner, this will be the best market to be in, right? So we're looking at Euro USD now. We're going to have a look. So there's a few things I want to just change the settings to. If you go down here, go to inputs. The first thing I want to change the setting to is I want to see the change in pips. So we're just going to add the change in pips, right? I'm also just going to make it a solid, right? Just because I like the way it's solid, so it shows me. Okay, cool. So we're gonna have a look at Euro USD, and the first thing I want you to understand is what session does your pair move in the most, okay? So there's something called pips, percentage in points or percentage in pips, right? So what that means is every time the market moves, every time it has one move or two moves, or it moves up or down, it moves in percentages. As a trader, you just want to know which one has a larger number in simple terms, right? You want to know which session has a larger number. So you got the Asian session, which is the Tokyo, you got the London session, you got the New York session. So for Euro USD, for example, you can see that the London session, the New York session has the most movement, right? Or pretty much like, for example, today we had London session is a bigger box. London, you can see quite a lot of times London is a bigger box, right? Quite a lot of times London's a bigger box. So what we're going to do is we're going to now funnel out the times frames of when we're going to trade. So we know now that Euro USD, we want to trade from 7 a.m. all the way to 4 p.m. Okay, so that's our trading window that we're going to trade in. So now that we understood that, what we're going to do now is we're just going to look at, there's a few tools that I want you guys to favorite, okay? Before we even look at the markets, there's the few tools that I want you to favorite. So first thing is trend lines. Just favorite, it's gonna help you later, trust me. Then we've got horizontal raise. Save it, trust me, it's gonna help you later. Then next, we've got Fibonacci retracement, okay? Then after that, we've got long position and short position, okay? And after that, we have the brush tool, the highlighter tool, the rectangle, the path, and also ellipse. Those are the things that I want you to save. The way candlesticks work, so do you remember, right? If I just quickly show you, you can see each and every candlestick. If I just zoom in, can you see like we have different shaped candlesticks, right? And there's a few candlesticks I need to explain to you guys so that you guys can understand. So with candlesticks, what I'm gonna do is I'm gonna get a highlighter, right? And I'm gonna show you something. So first of all, when price starts, right? So we have a new fresh candlestick. So price starts, right? So let's say price starts at this level. Oops. Let's say price starts at this level right here, okay? The way candlesticks work, right, is, let me just do it like this. Boom. So the way candlesticks work is, right, so we got this, starts at this level. What it will do is it will start to go up, right? And then it will start to go down, right? Right? And then it will just kind of move in this area, back and forth, right? Like that. It's just going to move back and forth in this area, right? And what's going to happen is where it's, and sometimes it might go up one little bit, then come down, but it's covering up this area, right? Covering up. And then we have like something like this, right? But obviously to make it clearer, the way the market will be, we'll have a rectangle like this. And then you're going to have like a bunch of lines coming out of it. So like this, which I want to make it black, right? Uh, where is it gone? There we go. right? So you will see that a candlestick will look like that. Now we need to understand. So basically, what the candlestick is it looks like this, but in simple terms, this is what it's going to show up as, right? So it's like this, where it just moved around. Now what this is if I just delete this now, is we have a few things. So let's say this is a bullish candlestick. A bullish means that it's the candlestick that's moving up, right? So if it's a bullish candlestick, the first thing we're going to have is we're going to have the open. So the open is here. Let me draw this as an arrow so you guys can see. Arrow, there we go. So this will be the market open, okay? And we're just going to write it down as open. Okay, so this is where the market started. So it came up really, really strong. Then, so this is the market open, right? Now you can see we have this kind of blue shaded area. This is called a body. So if I just draw an area again, so this is called a body. Okay, and then we have these little thin lines here. These are called wicks, right? So wicks. Oh, okay, and then we have also over here, we have the close of the candlestick. Close. Okay. Now, the way we trade, right? We want, so this kind of candlestick is just a generic candlestick. We've got the body, we've got the open, we've got the close, and we've got the wicks, right? Now, as a trader, you need to understand this because the wicks don't hold a lot of weight, but the body holds a lot of weight. So when the body's big, you know that there's a lot of momentum. When the body's small and the wicks are long, you know it's very indecisive. It's not as strong. So the reason why wicks have occurred is because market did go up here, but it wasn't the average area that the market was in this body. It was in this body, right? So you want to understand that because if you don't understand that, then you're not going to be able to trade, right? You see in every currency pair and even cryptos and stocks, there's always going to be this candlestick, right? So you need to understand it. Now, we have pretty much the same thing, but is kind of the reverse for a bearish. So if I just make this red, um, make this red. There we go. That's the body. This will be the close, right? This will be the open, and it's pretty much the opposite. So it'll be like this. So same thing, but this time the market opened here. The market went down, 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 down. It kind of went up a little bit, but the average of it was in this body, and the wicks were kind of where price did go, but it hesitated a lot, so it came into back to the average of this candlestick. That's basically the candlesticks. Now we have different shapes. For example, you have a candlestick, right, where it's literally like this, right, where you have a candlestick where it's like this, really, really small, and like you have a large wick like this, and barely any wick right here, right, like barely, right, like that. This would then look like for me that, okay, cool, price could be coming down, right? Likewise, we had the market doing this, right? Really, really small, large wick. For me, this will show me, okay, cool, price has tried to come down. The buyers were in control because we have a little bit average here. So we must be going up. We must be going up to the upside. Now, if the market, right? If the market was like this and it was kind of like small and hesitant and like it's kind of in the middle like this, right? And the close is like here. This is like an indecisive candlestick. It's like, I don't know whether we're going up. I don't know whether we're going down, right? So you have all these different candlesticks. So now that you've understood candlesticks, what we're going to now do is look at time frames. Okay, so what I'm going to do is that's pretty much the basics of candlesticks. You guys will, once you've traded more and you actually have a look at the markets, you will understand which each candlesticks. You can clearly see, like, you know, it's very, very similar to what we've drawn. We have, you know, large bodies, like things like that. You know, the open, you know, what wicks are, right? So now what we're going to do is we're going to just look at time frames and just go in depth with each time frame. If we go on the daily time frame, the daily time frame basically gives you the overview of the market. So the way I like to explain it is like the bird's eye view, right? So you've got the bird's eye view, then you want to go into, you know, when you go on Google Maps and you see like the little orange man and you click on that, it's pretty much similar. So when you're looking into the market, You've got the bird's eye view in the daily, and then the 1 minute basically is like that, street view basically. You get to see everything in more depth, there's more information. I would advise you to be using, if you're trying to be an intraday trader like me, is either the daily time frame, the 4 hour time frame, maybe the 2 hours, the 1 hour for sure, the 15 minutes, the 5 minutes, and the 1 minute. Okay, those are the time frames. Just favorite it, right? You can see I favorited it all here. We have three different types of traders. You've got swing traders, you got day traders like me slash intraday. Oh, I can't spell today, guys. Okay. We've got and then we've got the scalpers. Okay, now each scalper uses different time frames. So, for example, the swing trader, they will use something more like the daily time frame or even like oh, the weekly time frame, but they'll probably enter the market at entry at maybe like the 4 hours, right? Now, a day trader or intraday trader, something like me, I normally use like, for example, the 4 hours slash 1 hour for like analysis, and an entry will be at the entry will be like at the 15 minutes or the 5 minutes. Okay. And scalpers, they're more like in and out of the market, right? They'll be like around, they'll probably look at the market in the 15 minutes or 5 minutes and then probably enter on the 1 minute. So entry at 1 minute. Okay, now you're probably wondering why three different traders trading at different time frames. Well, this is because swing traders like to hold trades for more like a week or maybe even a few days or maybe even like a month, right? They like to hold trades for a very long time. They're more like long-term traders. Then you got like day traders and intraday traders, which like to hold their trades for maybe like maximum a few days or maybe even like a few hours, right? And then you got the scalpers that are just in and out of the market. They're in and they're probably holding their trade for no more than 15 minutes and they're out. Now, swing traders, they're most likely going to have 2% growth per month, whereas like day traders, intraday traders, they could get like 20% growth per month, and scalpers could get like 200% growth per month, right? Because they're trading so rapidly, they're in and out of the market, but there's some flaws, right? Because swing traders won't see that many losses, whereas scalpers will have a load of losses, but their win rate would make sure that their losses are covered up, basically, right? So that's basically time frames and understanding which time frame and which kind of trader you are. So if you have a larger capital, I would most likely say be a swing trader because you can place larger trades, but you can also hold that trade for longer, and you can actually hold the trade and make money and see what's going on, the bigger view of the chart, right? Whereas a day trader and intraday trader, you can intraday trade in like with a £10 account, which I've done previously. But most likely, I say like £100 account, £200 account, but you can do it with a small account or even £1,000 account. I know people with large accounts that still day trade just because it's one of the preferred methods of trading. Then you've got scalpers. Scalpers are more like, you can actually trade £10 or you can trade a large account, doesn't really matter, but you know that you're going to be risking a lot of money. So your risk is very, very high, but you know that you could get a large return in a small amount of time. And you can actually then pick what kind of trader you are. So if you're someone that has small capital and you don't like, the market, you don't like working under pressure basically, then scalper is not for you. You might be able to be like a day trader or intraday trader. But if you like the pressure, you like, you have the psychology and the mindset of, losing money, making money, scalper is for you. But if you're more reserved, let's say you got a job, a 9 to 5 or something like that, swing trader could be for you because you can just place a trade, do your work, whatever, whatever, and come back the next week and see what the market's doing. So because I'm an intraday trader, my bias will be intraday. So if you are watching the video up till now and you want to be a scalper or a swing trader, unfortunately, guys, I don't actually teach you guys swing trading scalpers, but my method still works for swing traders and scalpers, so you can stay on the video and have a look. But I'm going to be more biased on intraday and day traders because that's my niche and that's what I'm good at. I don't want to teach something that I'm not good at. So we're going to move on. Three ways the market moves, right? Now everyone's thinking, hold on a minute, three ways? Yes, three ways, guys, right? So the three ways is, if I just get my trend line. So the first way is this upwards move, right? Now, the market doesn't just move up in one direction, right? What it will do is it will go up and down, up and down, up and down. But overall, it's going up, right? And what we call this is an uptrend, okay? And then we have market basically going down, right? Again, it doesn't just go down straight away. What it will do is form these like this zigzag kind of thing where price is going down and up, but overall it's going down, right? And we're gonna call that a downtrend. Okay, so we've got this uptrend and downtrend. Now, with an uptrend and downtrend, so in an uptrend, we have a few things, right? We've got these levels right here, which is very, very important, guys. So I'm just going to highlight this for a second. And these levels are very, very important as traders. You need to understand these levels. So, for example, this is called a low. Okay, this is the lowest point in the market. So I'm just going to call this low. Okay, then you have a high. At the moment, so when you're at this point, this is a high. Okay, then you have price coming down and then causing a lower high, right? So it's still a low, but it's higher than this low. So we're going to call it a lower high. So I'm just going to put that as LH so you guys can understand. Then we go up, price goes above this high, but it's a higher, it will be a, sorry, this is not a lower high. This will be a higher high, higher low, sorry. Sorry, guys. So a higher low, right? Because it's higher than this low. Then we go up. This will then be a higher high. HH, higher high. And then the market basically does the same thing, you know, causes another higher low and then another higher high. Oops, right? And it just keeps doing the same thing. And if the market came down again, right, we would have another higher low. This would be the new higher low right here, right? Now, similarly is the same on the downtrend. We've got a few points here, which I'm just going to quickly highlight. And we've got the highest point. So I'm just going to put this as high. Let me just put this up over here. Then we've got the lowest point of this leg. So low, right? Then we've got, for this time round though, this will be a lower high because it's not higher than this. It's actually lower than this. So this will be LH, lower high, right? And then price comes down, creating a new lower low. So you're going to see that as a lower low. And then similarly again, it just repeats. And it just repeats, right? So that's how you identify an uptrend or downtrend. So if you see higher highs and higher lows, you know it's an uptrend. If you see lower highs and lower lows, you know it's a downtrend. Now, I told you guys that there's three ways the market can move. Now, there's another way, right? And the other way is the market moving like this, right? Up and down, up and down, up and down. And it's basically just ranging in this motion, right? It doesn't form any like highs and it doesn't form any lows, right? It's just pretty much in the same area, just zigzagging between one price to the other price. What we call this, guys, is called a consolidation. Okay. Now, as a trader, you don't really want to trade between consolidations because any time price can just go up or down anytime. So me personally, I wouldn't trade this. Whereas this one, in an uptrend, we would just buy it on the high low. So we would just buy here, right? On the downtrend, we would sell here and sell here, right? So it's kind of clear where to place buys and sells. Whereas over here, you don't really know whether to buy here or sell, buy or sell, because this could actually, the market could just potentially come back down and you think, oh, we're going to buy, and then it just continues to come down and you just lost a little bit of money, right? So we want to make sure that we have a higher probability trade, right? We have a higher probability trade. Now, before we look at the actual market, there's a few more things I need to tell you guys, right? So there's two different types of traders. You've got technical traders and you've got fundamental traders. Now, technical traders, they normally trade with patterns and historical data from the market. And fundamental traders go based on news, social media, what leaders are saying and things like that, right? So we actually have a website. It's called Forex Factory, right? And Forex Factory, basically what it is, it explains to you each and every fundamental news what's going on. So sometimes you'd be like, okay, cool. um, looking at the market, right, and you see, okay, cool, we're in a downtrend, but why are we in a downtrend? So the fundamental traders tell you the why. Technical side will show you, okay, we're in a downtrend. Why are we in a downtrend will be backed up with the fundamental traders. So the fundamental traders, if you come back here, they follow these trades. So for example, if I go for this week, right, and if I just unclear, just remove all the filters, this is how it would look like, right? Now, if you're a beginner trader, you don't really need to know too much. What I advise is go into filter, okay? Remove all these so these are the impact, right? So the red is a highly impact, right? And just apply filter. And these are now the highly impacted of this week. So I now know at 2 p.m. on a Tuesday, USD is going to be affected. The US market is going to be affected. So Australian dollar at 12:30. Okay, I know that, okay, the Australian dollar is going to be affected. 10 p.m. the USD is going to be affected. So I now know that either I trade in these areas or I don't. And the reason why being a fundamental trader is really, really important, because let's say price was at an area, right? We're like, this is what price is doing, let's say, right? Price is it's come down. We know we're in a downtrend, right? We know that we're in a downtrend, but now it's just slowly moving very, very slow like this, right? But we know we're in a downtrend. What fundamental traders will do is they will push the market down. So when the news occurs, which the news occurred over here, right? That will push the market down, continuing this downtrend, right? So what happens is sometimes the market will move slow because it's waiting for news. So when the market is moving slow, don't be fooled by the market. Have a look at the fundamental trades and actually see what's going on with the fundamental trades, so that you can actually be part of what's going on and actually understand, right? So that's just the other side. So you've got the fundamental traders and you've got the technical traders. Now, I mostly trade technically, so I don't actually trade just based on fundamental news or fundamental trading, whatever tools they use. I'm more of a technical trader, so I look at fundamental news as an indicator of why the market is moving in a certain way, but I don't look at fundamental news to place trades. I use technical understanding or patterns or just historical data in the past. But looking at the technical side, what I like to do is I want to build a story. I want to build a narrative in the market. So I'm going to show you a few things, a few methods that I use to just build a story so that I can then execute a trade. And that's what your main goal is for today, is to be ready to execute for a trade. We're going to first analyze the market so that we can execute a trade. And then what we'll do is we'll actually have a look at how to execute a trade on MetaTrader 405. So we need to first identify the trend. Okay, so are we on an uptrend? Are we in a downtrend? We need to identify. So what we do is we go to the 4 hours, right? We go to the 4 hours and we don't want to go too far back. Like we don't want to go all the way back in like 2020, 2020, or you know what I mean? Like you don't want to go all the way back here. Keep it as recent as possible, right? So for example, like over here, you can clearly see we were in an uptrend, but now we're kind of going in a downtrend. We kind of started to push down, right? So what I like to do is when I'm drawing uptrends and downtrends, I like to just draw basically an area where price basically every time price got to its point, it just pushed up. So the first leg it went up, then it came down, then it touched this area, went up, it came down, it tried to push up, and then we had that follow through showing us that we're in a downtrend. And then similarly, we have this, right? Basically the exact same thing where price basically went, it came down, basically tapped here, almost tapped here, came down, and basically came up, tapped, come down, made that big push. So now we understand that we are in a downtrend. So what we're going to do is we're just going to remove this. Actually, no, we'll keep the trend line here. So there's something called support and resistance, right? Now, a lot of traders will use support and resistance. They'll call it supply and demand. So what a support is, right? If I just explain to you guys, if the market is, let's say, going up like this, right? We have support levels. So we have a support level here, right? Support level or demand level. So every time price comes to this area, we know that we're going to buy. Then we have like a resistance level. Resistance level is basically the highest point in the market, okay, like this. And then we just basically, it continues to do the exact same thing and starts to build levels of support, right? And also over here, levels of resistance, okay? So you have level of supports, level of resistance. So now I know that every time price gets to one of these areas, we are going to buy. So let's say now price decides to come down, come down, come down, come down, come down. Don't, okay, touch this point. Okay, what happens? We then see an impulsive move to the upside, right? Because why did this happen? Because we have a level of support. Support is always the below area. A lot of traders will call that the floor, and resistance is normally the ceiling, the high area, right? So we've got the floor of the market, always floor, floor. And sometimes what happens is the ceiling will turn into a floor in the uptrend. And if we're in a downtrend, it's basically the opposite, right? So we're going to use this in the markets and actually understand how it works. We can have a look. So we've got price going up, right? It comes up and then starts to come down, right? And then it comes up. But we want to understand why did it go up? Why did it go down? So let's actually mark some areas. So the way we're going to mark the areas is the lowest point. What's the lowest point? So this is the lowest point. So we're going to mark this as a level of support. Support, right? Or demand, right? Then price comes up. Price comes up, price comes up, then starts to come down, right? It starts to come down and it's now reached another level, right? This is another level of support. So when it goes up, this is now resistance. So we're going to just draw this as resistance, right? And you can actually see that resistance, right? It comes down, builds another level of support. So this is, right? This resistance though, draw another level of demand. Right now, this resistance has now become a level of support. Why? Because you can now see that price, that ceiling that was a higher point of this price has now become the floor of this price, right? So you can now see that this is in the market, this is very, very valuable for us. So we're going to keep this, right? I'm just going to put this as gray. So you guys can actually see, right? And we're just going to delete this, right? So now we understand that this is an area of interest, right? And then we're going to push it back and see what happened in this area. And you can actually see that price tapped here, we bought. Price tapped here, we sold. Price tapped here, was kind of ranging, kind of sold. And then we kind of sold again. And then price came down, we kind of sold again. And then now we're buying, right? So it's a very, very high level of supply and demand, okay? Now we need to find another level of supply and demand. Well, okay. We go up, go down. Okay, we've got another demand zone here. So let's just draw that out. And does it respect? Oh, wow. It respects once, twice, and 3 times. So this must be another level of demand. Okay. And we can go so on and so on. Now, as a beginner trader, you'll start to realize that your chart's getting very, very messy. So what I like to do is I'm going to give you another key tip, right? Is we're going to just remove drawings, right? We know it's an uptrend. We know price is going up. What we can do now is I like to work in key levels. My support and resistance is going to work correspondingly with key levels. Now, what is key levels? Key levels are key points in an area, round numbers in an area where market goes to. Remember, banks are trading this, right? So if banks are trading this, banks don't want to see 1.0830312 or 322. Those numbers are crazy, right? They want to have nice round numbers. So what we're going to do is we're going to use key levels as an example. So what we're going to do is we're going to add our horizontal, so a horizontal line. We're going to add this line and we're going to start placing at key levels. So where is price now? 1.08305. So what I'm going to do is I'm going to put it at 1.08 flat. And obviously, because price never lands exactly on its point, what I'm going to do is I'm just going to draw an area around it too. And you can see right now clearly that this is a level of supply and demand, right? Why? Or support and resistance. Why? Because price is, every time price gets to this area, we're either buying or selling. So next, we want to now get the next area, right? So after 1.08, I'm going to put 1.09. And similarly, you can actually see that if we just zoom out, you can actually see that it's pretty much doing the same thing, right? Another level to trade in, right? Now, guys, this is gonna give you so much game, right? This is a whole different level of trading, guys. I want you to really pay attention because you see everyone draws support and resistance in random areas. When you start using key levels, it becomes so much easier. Like you can just see we've already got 2 levels of trading. We've already got 2 levels where we can place trades. Now there's one more key level that we're going to place, right? And there's actually going to be in between here, right? And it's going to be 1.08500. And then again, if we just draw a little area like that, you can actually see it's now highly respected, okay? So we've got like these three zones right now, right? Now we want to know, okay, how are we going to trade with these three zones? Well, that's where we kind of go scale in a bit. So let's go on the 1 hour time frame and actually have a look and see what price did. So because we know now we have these key areas, we know that, okay, cool, price. If price comes down to this area, comes down, and then it retests, right? It comes back up in the zone, right? Once we see that clear move, price is always gonna, just test out if you're buying or selling, right? Boom, price comes to this area, very, very strong move downwards. Price comes to this area, okay, we're gonna sell, right? Instantly gonna get my short position out, I'm gonna sell, right? We then place stop loss above this area, always above the area, right? Or if you want to, you can always put it above these highs as well. Remember, price forms higher highs, high lows, you know what I mean? So you can either place it so above the highs, or you could place it above here, right? And then target the next key area, right? And boom, that's it, guys. It's as simple as that. Just placing your trades as simple as that, guys. We didn't use any crazy indicators. We didn't use anything. We just used key levels, and we're just trading based off this key level, right? And the simple tactic I'm going to teach you guys is a simple break and retest, break and retest. When price breaks, wait for that retest. If it doesn't retest, means that price is continuing to go in the direction, so it's invalidated, right? You want a clear form of break and retest. So for example, over here we have price come to this point right here, right? We can see price come down, right? We know that we're on a downtrend, so what we're going to do is we're going to wait for that retest. We're going to wait for price to come back up to my zone. Once it comes back and it shows me signs of rejection, that's when we sell. And then we will sell over here, stop loss just here or below these highs or just above these highs, and we're going to target all the way down here. So we're looking at MetaTrader 4. Now, if you are trading on MetaTrader 5 or CTrader, it's pretty much the same process. CTrader is a little bit different, but MetaTrader 5 is pretty much the same process, just a different user interface. But when you are on the app, the first thing you want to do is create a new account. Now, remember, we're making a demo account. So create a new account and it will say open a demo account. Just click that. Then just click the top link, fill in your detail, your name, your phone, your email, and then go on to account type. Now, if you are a trader that wants to just, you use Euro or use Swiss franc or Japanese yen, you can use other ones, but most traders will probably use USD. If you are from London as well, you're using Great British Pounds, just use USD as, that's just a demo account that they use. Then we go on to leverage. Now, leverage, I'm just going to give you a quick overview of leverage so that you guys get an understanding of what it is. So leverage is basically you borrowing some money from the broker. For example, if the leverage was, let's say, 1 to 50 and I put £1,000 in my account, I can place trades with a quantity of £50,000 because it's 50 times the amount that I put in. So at the moment, we've got leverage at 1 to 100. I am going to change it to 1 to 50 because it makes it easier for us when we trade because it's more realistic gains. Then we go to deposit. Now, right now, the deposit is set at $100,000. So at the moment, we don't want it at $100,000 because that's really unrealistic. We want to put it at the lowest amount that we can. On MetaTrader 4, that is 3,000 USD. And then we're just going to click register. Once we click register, you get your login, your password, and the investor. Because it's a demo account, you don't really need to save it. You can just click done. So now you're onto your app, right? And you can see there's a bunch of currency pairs on your list. If you are, let's say, for example, you're trading Euro USD, it's going to be on there. Now, if you can't find, let's say I trade gold and you can't find it, you click the add symbol, just search up the pair, so XOUSD, just click add and then click cancel, go back, and it should be right at the bottom on the screen. It is very backdated, very, very old, but it's still very, very easy to use once you get the hang of it. So let's say now we want to place a trade. So what we can do is let's say we're doing placing a trade in Euro USD, right? The trade that we saw on the markets, right? So you click Euro USD, then you click trade. Okay, now we go on to this, we go onto the screen where it has my currency pair, it has something called instant execution. And now what that means is it basically means that as soon as you click a buy or sell, you will enter the market. Okay, so let's say for example we want to buy, right? Now before we buy, we need to also know the quantity of how much we're buying. So at the top it says 0.01. Now these are in lot sizes. So lot sizes are basically the quantity or the amount that you're going to be putting into the market. So you got 0.01, you got 0.1, and just one standard lot size. So one standard lot size for Euro USD will probably be like $10 per pip. So every time it moves 1 point, it'll be $10. For 0.1 lot size, it will be $1 per pip. 0.01 will be like 10 cents, right? So if we look at our markets and we have a stop loss, for example, 17 pips, and we only have a £3,000 account, so we don't want to be risking, want to be risking, let's say $17, right? You only want to risk $17. So what we'll do is put it at 0.1 because 0.1 means $1 per risk. It's not always going to be like that, but roughly you can just, with your mental maths, you can just keep it like that. Then you got something called stop loss. Now with stop loss, you can add a stop loss. What that basically means is that when you place a trade, let's say the market does go against you, you have an area, you have a point in the market where, okay, your trade will just stop instantly once it hits this area, so you don't lose or blow your account. You then have take profit, which take profit is basically the similar thing where you're in profit and you want to secure profit. You can actually take your profits in the name, take profit, and you can actually take your profit at a certain point. So when we were looking at the market, so I can see 1.08 would be my take profit, and my stop loss, I'll just put it at what I put it as 0.8662. So 662, that's what we put in the market, right? So then we're gonna now click sell, and there we go. We have now officially placed a first trade on the markets. What you can do now is you can go onto your chart and actually have a look. MetaTrader 4 doesn't actually show you on the chart. So if you are trading MetaTrader 5, you get to actually see your trade on the actual app. But if not, you can just refer to TradingView. You can't synchronize the apps, unfortunately, but the broker that I use, which the link will be down in the description below if you want to use my broker, the broker that I use, you can actually trade it on TradingView itself. So you can do everything on TradingView. Equity is, so you got the balance and then you got equity. Equity is basically your floating money, right? So what the market, so right now is $2,999. So that means that I'm in minus $1, but because I haven't secured that yet, that's just my equity, whereas balance is always going to be 3,000. A margin, so this is basically like, you know, once margin gets to a certain level, your broker will take you out of the trade so that you don't, you know, practically blow your account. So that's also something to have a look at. So just making sure your margin level doesn't get to like 50%. You always want your margin level, you know, above a certain level. That's something that you would have to look at your broker and actually look at your risk management as well. If you don't want to make a demo account on MetaTrader 5, you want to use different platform, or you just want to have a demo account with a lower amount, let's say $100 or $200, or even, I think it can go up to like, I think it's $100 or two. I think the lowest you can go is $200, right? And the broker that I use, you get to do that. So again, down link in the description below is my broker, and if you want to place trades just like me, you can also check that out as well. And you can make a live account, fresh live account on that broker. Very, very quick, easy sign up process. And I've been using that broker for around 4 years, so it's really, really good. Never had an issue with my withdrawals, never had an issue with the spreads or anything like that. It's really, really good broker. But that's pretty much it with just, you know, placing the take profits, placing the stop losses, and actually placing a trade. Now guys, after all of that information on the charts, information on MetaTrader 4/5, stop loss, take profit, all of that information, we are finally done, and you can finally place your first trade. I know that could be overwhelming. I know it is very, very scary for a lot of traders. Hence why I'm actually got a program where I actually help a lot of students, like you saw at the beginning of the video. I help a lot of students. I guide them so that they don't hit losses. I guide them so that they are disciplined in the markets and they don't waste time. I've been trading for 4 years now, guys, and I have 4 years of experience in the market. So if you're someone new or you've been trading for a while and you just need that extra boost or you need that extra guidance, I have a mentorship program, and also we are launching a academy. Now this academy is not just like a normal academy that you see on all these Forex gurus or anything like that. This is an academy where you get taught. There's so many lessons where you get taught live, right? You get coaching while you're in this academy. I don't just chuck you a few videos and you watch it. No, you get to be coached by me or one of my team members. You get coached by us, and we're going to coach you and make sure you have right guidance to place your trades, to actually understand the market, so that you don't fall for that trap that everyone else falls for. So just making sure that you have that support and guidance, because I know a lot of traders, they have these academies and all these things. No, my one is not the same, guys. Now I know you probably heard that many times as well. People say, oh, my academy is not the same, but they throw you the same amount of videos. But guess what, guys? This academy is a little bit different. I'll tell you why. Number one, we hold coaching. Number two, we do live webinars. Number three, I show you, not only do I show you my charts, not only do I show you my markets, I actually show you entry models. Not only do I show you entry models, I actually show you case studies of previous trades that I've done. Now, as a day trader, I have thousands and thousands of case studies from 4 years back, right? I have case studies of just the markets and certain trades, winners or losers, right? Because at the end of the day, we are traders, we win and lose. So if you watch my video all the way to the end and you kind of get a gist of trading and you know that this is something that you want to do to get yourself out of that rat race, out of that 9 to 5, and become a professional trader, this academy is for you. Now, if you click down in the link below, you're going to see a price, right? It says £150. Now, you're probably wondering, £150 one-off payment, what am I getting? You're going to be pre-ordering the academy plus the mentorship for only £150. Guys, that is a no-brainer. It's a one-off payment. I think this is the cheapest that I've seen in the market so far, and it's a no-brainer, right, guys? You invest £150. Like I showed you, there's a guy that made $30 to $200. That's basically the payment, and that's on 3 trades, right? So that's basically the whole academy paid for, right? In 3 trades, your whole academy is paid for. So it's a no-brainer. If you made it this far, make sure you subscribe. It's for free, guys, and join the community, and also like this video and show me some love in the comments down below.